This is Scott Becker with the Becker Private Equity and Business Podcast and the Becker Business Minute Podcast. Thrilled today to be joined by a brilliant investment banker who also founded his own firm. We're joined today by Craig Castelli. Craig's the founder of Hill Advisors. He's going to talk to us about trends he's watching. He'll talk to us about where he's most focused this year and a lot more. Craig, there's so much going on in the world right now. Can you first take a minute and just introduce yourself and tell the audience about Hill Advisors?
Thanks for having me, Scott. It's great to be back, and congrats on a great start to the new podcast. Craig Castelli from Hill Advisors. I founded the firm, hard to believe it, but 11 years ago in January 2014. We're a low middle market investment banking firm. These days, primarily focused on the sell side, although we do have a valuation practice and do occasionally take on some buy side clients. But our clients are generally entrepreneurs who are growing and ultimately either exiting their businesses or bringing on private equity partners to help fuel their growth. Size-wise, we cover a pretty broad range. I tell people 5 to 200 million, and we have covered that spread over the last couple of years. But vast majority of our deals are in that $10 to $50 million enterprise value range. So that kind of first platform or chunky add-on to an existing portfolio company. Sector-wise, we do a lot in healthcare, specifically healthcare services, physician roll-ups, practice management, that type of thing. A lot in residential facility services. So think any type of service provider with a blue-collar workforce, and then the occasional manufacturing, distribution, other type of business services deal to round things out.
Thank you. And there's so much going on in the world right now, inside and outside of healthcare. Talk to us about what are the few key trends that you're sort of keeping your eye on that you're watching currently?
I'll give you 2 in healthcare, and I'll give you 1 outside of healthcare. So first of all, within healthcare, we've seen the last couple of years a major shift in sites of care. Payers and hospital systems are recognizing the cost savings benefits to procedures performed in outpatient settings, in ambulatory surgery centers, as well as the ability to provide a lot more care in the home. And so, as a result, we're seeing tremendous opportunity for the growth of, outpatient practices, ASCs. Also within, home health, there's a tech-enabled play involved, and a very recent trend is, legislation supporting family members and other loved ones to be paid as caregivers, which really, I think increases comfort for the patient at home, but also opens up, new opportunities for anybody involved in the home health continuum. So that's one. Second one is more deal and private equity driven. We've seen an increase in private equity hold periods across all industries the last couple of years. And, in the past, when hold periods get this high, it's followed by periods of robust M&A. Ultimately, these portfolio companies need to be recapitalized, and that injects fresh capital into the market. But also, in the midst of this, it's had an impact on M&A in that, some of these portfolio companies are being held this long because they're not the healthiest, and they're not necessarily as acquisitive as they were in the past. We've seen a little bit of capital taken out of the market in that regard, but it's been balanced by some growth of doctor entrepreneurs. If you're a dentist who's building your own DSO and hasn't brought on private equity yet, in the past, it can be very difficult to compete for acquisitions, and not that it's all of a sudden easy, but as your competition leaves the market, it creates opportunity for you as the doctor to grow faster and perhaps pursue targets that you may not have historically. Last one, we'll get outside of healthcare here, and this unfortunately is very timely given the catastrophic fires in Los Angeles and some of the hurricanes we experienced in Florida and elsewhere in the Carolinas late last year. You can't open a newspaper right now without reading something about the increasing homeowner and property owner insurance rates, as well as how difficult it can be to get insurance for a property in certain markets, and how insurance companies are paying less towards any sort of storm repair, especially when it's tied to a natural disaster. And these impacts are not just limited to the geographies that are most prevalent to experiencing these natural disasters. I can say from experience that, my own homeowners insurance has risen pretty dramatically in the last couple of years. And there's a recent Wall Street Journal article pointing out several markets that you don't necessarily associate with these disasters also seeing these rising rates. Where this is important for us, I think on a more focused level, a lot of our clients who are these facility service, residential services contractors are repairing storm damage. And they're finding it increasingly difficult to work with these insurance companies. Yet at the same time, these are still necessary services. And if you own a building and you lose your roof in a storm, regardless of whether or not the insurance company is going to pay for the new roof in part or in full, you have to replace it. So we're still waiting to see how this is totally resolved in the long run. But it's an interesting trend in that regard. And the last thing I'll say is just as a consumer, as you see your homeowner's insurance continue to rise, that has an impact on your own ability to spend money on elsewhere discretionarily, as well as on property values. And so I think there's a lot to be determined still as a long-term outcome of these impacts.
Thank you very, very much. And when you look at the cost of home ownership and insurance being almost ungettable in some places for certain things, whether it's Florida for hurricane and wind, California for earthquake and fire, ultimately, shouldn't that have an impact in the housing market as you need insurance for mortgages and there's only so many people that can afford to not have a mortgage? So at what point does this have a more significant impact on home prices and sort of values, and also to an extent put more stress on founder entrepreneurs that may have some of their net worth tied up in their business and in their home?
Absolutely. Something has to give there. And you're right. The average entrepreneur has a disproportionate amount of their net worth in those two assets, their business and their home, neither of which are liquid and, can lead to a very stressful situation for sure.
100%. It seems incredible there's not been more of a ripple effect through the economy because it seems so challenging. Take us to, Craig, where are you most focused and excited about this year? Where are you most focused?
Well, I'm going to give you something totally unrelated to business first. I'm originally from Detroit, and my Lions are playing at a level that I have never seen in my lifetime. So I feel like I need to do my part as a fan to support them and help them get to the promised land like everybody else. And Scott, I don't know if you have a team left in the playoffs, but if not, you are welcome on the Detroit Lions bandwagon. On the business front, nothing excites me more than working with interesting, dynamic entrepreneurs who are leading, growing companies. And we have a couple opportunities we're working on, right now specifically, and not always in some of the predictable and easiest spaces. But we really love when we get the opportunity to partner up with entrepreneurs, ultimately lead them through a transaction, but help them get there too, and help really guide them and steer the ship as they're doing something unique. One I'll single out right now is a pain management group that we're working with 4 young partners. A tough space from a deal perspective. We've seen some reimbursement challenges in the past. Obviously, opioids are a topic that everybody is fearful of. Yet at the same time, it's a category that is growing and not going anywhere. And when you have the right team and the right strategy in place, it can be a fantastic opportunity to build a really robust business. That's just one of a few areas where we have clients who are not just your typical baby boomer who wants to sell and retire, but really looks at growing a business on their own, ultimately bringing on private equity, staying involved for 2 to 3 turns, not just 3 to 5 years and out. It's something that we can really stand behind and potentially even put some of our own capital into.
Thank you. Very, very exciting. And when you look at sort of the private equity funds that you talk to, and I know you just completed a large survey of private equity funds, what are you hearing from them? Where are they most focused, and what are you hearing from them about the deal world, about the environment, where they're excited, and more?
So this is kind of cliche, but they're hungry for deals, and especially for new platforms. Despite some of the challenges in the M&A environment the last year or two, there is still a monumental amount of capital to deploy. And as these hold periods start to get back to normal, and more platforms are recapitalized, that will just inject more fresh capital into the market. You referenced our survey. The vast majority of private equity investors who participated said that they expect 2025 to be at least as good, if not better, than 2024. Similarly, all but one respondent expects valuations to stay the same or increase. We had respondents from all different sectors, the healthcare and business services investors that we'd expect, but we also had real estate investors and tech investors and others, respond there as well. And so I'm curious who the one is that thinks valuations will decline. I'm guessing it's not somebody who's in the lower middle market in healthcare and business services. I'll tell you that much.
No, it's fascinating on the valuation side because you sort of look at interest rates are such a part of that as well, and optimism and margins. And so everybody has been expecting interest rates to come down. Now that train is slowing down a little bit, though low inflation numbers today resonate with the markets, of course. And some of this just relates to what happens with the interest rates multiples as well, and optimism, I guess.
Yeah, I think that's a part of it. I mean, we definitely saw valuations come down a little bit in 23 and 24. So staying, holding steady or increasing slightly on the heels of, some positive economic news, makes a lot of sense.
Thank you very, very much. And Craig, any final thoughts you want to share with the audience today? And you've had this incredible journey. Any thoughts on, besides any final thoughts generally, any thoughts on founding your own business and how stressful that was or exciting that was? Take us back to that moment for a moment.
Sure. Starting a business it's a wild ride, and it's not for everybody, but anybody who has the capacity to do it, I certainly encourage it. There's no greater level of accountability than being, truly accountable to yourself, because as a founder, as you're building a business, you're the last to get paid. It's as simple as that. All of the comforts of a corporate job are gone. And I had plenty. I started my career doing corporate M&A for one of the largest multinationals in the world. I had opportunities. I had, the capacity for, development and growth. I had fantastic benefits, but at the same time, it also came with a lot of constraints. And, when you can free yourself of the constraints, and if you can tolerate the risk and overcome, kind of the rocky start that's, inherent with the launch of any business, or at least any self-funded business, the rewards in the long run are great. I really, I somewhat tongue in cheek say the only way I would ever go back to a corporate job is if I were like one of my clients and had to agree to an employment agreement in conjunction with my sale to a large corporation.
You're fantastic. I mean, it's an incredible journey that you've had, and an incredible service you've done for your clients. And you do an incredible job in the middle market. We'll look forward to having you on our February 6th Healthcare Deal Trends 2025 webinar. We'll talk more about healthcare specifically. Again, Craig Castelli, founder of Caber Hill Advisors, magnificent leader and investment banker. Thank you for joining us today.
Thanks, Scott.